All right, guys. Good afternoon. My name is Chooks. I'm your Forex instructor. I'm a technical analyst on Zingo Forex Academy. So today, I just want to review some of the trade setup that we had during the week. Okay. All right. So, guys, first of all, it's important. I've been receiving a lot of calls and comments on the outcome of some of our trading signals. Okay, so it's important I did this video just to explain to us how to take my signals. Okay, you don't just hop into the trade. You need to understand how to trade forex. I keep telling people that you need to be properly educated. Okay, when you have the proper education, you will know how to take these signals. Okay, sometimes when I release these signals, I just take it for granted that most of these people who are consuming the signals, they understand how to trade forex. Okay, but just for the purpose of this particular course or for the training I usually give to my students free of charge, I from time to time I'll be explaining some of the concepts that are in the paid courses for you to use. Okay. So guys, what am I trying to say in essence? You need to understand how to manage your trade. Okay. Trade management is very, very important. If you don't know how to manage your trade, you just see raw signals and you just enter, you just hop into the trade and take them, you will lose money. Okay, you must understand how to manage your trade. Trade management is very, very important. So, guys, let me give you a typical example. Here, when I sent out this signal on GN, that's Great British Pound, New Zealand dollar. Okay, this was the trade signal. Of course, those of us who know this should understand that my perspective here is a short trade. Okay, is a short trade. Okay, so and I gave a position for T1 and the T2. That's take profit one, take profit two, down to take profit three. Okay. Now the way to use a signal like this, guys, is this. Now, guys, once price hits your entry, okay, then you should begin to monitor the trade. You should begin to monitor the trade, okay? Now, when price hits your take profit one, you have to trade your stop loss, okay? When the market hits your take profit one, you have to move your stop loss to break even and take some partial profits, guys. You have to take some partial profits. Don't be greedy and leave your entire, your entire trade in the hands of the market. Okay, the market is very aggressive. The market will pull back and take you out. Okay, and if you're not there to re-enter at the appropriate time, you will just lose money. Okay, so guys, when I send out trade signals, the first thing you should do is that you have to monitor the trade when it hits your entry. You continue to follow the market. Okay, now depending on the kind of trader you are, if it is a swing trade, guys, you don't need to monitor your trade every hour, every second. Okay, maybe every day you come and look at your trade. Okay, now for this 4 hour time frame entry, I expect it should be a swing trade. Okay, so for that you should just visit your chart every day. Okay, and monitor what the chart is doing. Okay, of course, you know how many hours you have in a day. Okay, how many 4 hours you have in a day. Okay, so you do the calculation and make sure that you visit your chart every day at the close of the trading session that you are in. You monitor your chart and see what the market is doing. Okay, now, so when you enter your trade or when the trade hits your entry, now when I give entry signals like this, I usually use pending orders. Okay, because I want price to pull below certain structure levels before I enter. So I use pending orders. Okay. Now when you use pending order, I've already looked at the market and know where the swing points are. I want price to break through those swing points and confirm my directional bias before I enter the trade. So that's the way I also expect my students to trade. See, for this particular trade, the trade is moving very well in our direction. Some people may take partial here. Some people may wait till TP1, depending on your trading strategy. Okay, you must have a strategy, guys. Don't just enter the market without a strategy. You must have a strategy. Okay. Now let's look at the other markets we analyzed. Okay, gold. Okay, yes, on gold, what we had here is that I said the market was going to push down to this level and retest the level and go up. Okay, so and I saw a head and shoulder pattern. Okay, and I said price should come and retest the neckline, after which it will bounce back to structure and begin to dip. Okay, that's what we're seeing here. You can see this pullback here. The market came here and pulled back, slightly to structure, okay, before it came here and triggered our entry, okay, triggered our entry, okay. So now the market has been triggered, the trade has been triggered, okay. So now you have to monitor this market. It's on the 4-hour time frame. It's a swing trade. Monitor the market. When the market has gone reasonably one to one, when the market has moved ratio 1 to 1, you take some partial profit. That is what I recommend. If you have hit ratio 1 to 1, take a partial profit and let the other part of the trade run. Okay, so that's what I recommend, guys. Okay, let's look at the other trade setup, or the other trade setup we have here. No, I didn't give out this. Okay, the other trade setup is on the AUD CHF. Okay, now this trade setup is on the H4. The entry is on the H4. Okay, or is it on the H4? Let me see. Is it on H1? Okay, I think it's on the H1. Okay. Okay, fine. It's on the It's on the hourly time frame. The entry is on the hourly time frame. So, guys, clearly this market hit our take profit one. Okay. Now, if you hit your take profit one, what you should do is to move your stop to break even. When you move your stop to break even, you will see that by the time the market reversed, you move your stop to break even and take partial profits. Okay, take partial profits after trailing your stop. Okay, that is, you have taken some profit out of this market. You can see that by the time you got here, you would have taken some. By the time you got to your TP1, you would have taken out half of the profit and left the rest to run, and then move your stop to break even, so that by the time the market pulls back, it will take you out of the market. Okay, it will take you out of the market in partial, in partial profit. Okay, it will take a little profit. When you move to break even, it's slightly below break even, of course, taking care of the charges and the spread. Okay, so I usually recommend slightly below entry. Okay, so that way you would have taken some part of the profit out and have taken risk completely out of the table. Okay. So if you have managed this trade is a winning trade, guys. Okay. This trade is a winning trade. Okay. All right. So let's look at the other one. Let's look at the other trade setup. Okay. No, this one is not part of it. No, this one is not part of it. Okay, yes, this is the other trade setup, guys. The Aussie card, okay, the Aussie card, okay, where I saw the megaphone, bearish pattern, okay, as a continuation pattern. So market whipsawed, okay, but it did not hit my entry, okay. It did not hit entry, okay. Rather, I didn't set any entry here, but I gave us the trade idea to be that the market will pull back to structure and short, okay. So here I'm looking for a short opportunity, okay. The market is trying to move back into the structure of the megaphone structure, but it has not fully done that. Okay, I'm still waiting for it to come to structure, break structure, and retest it. Then I look for entry opportunity. Okay, so guys, these are the trade setups we had. Let me look at these. Okay, this one, I didn't post this. I'm only analyzing this. I'm looking at what the market could do here. I'm looking at a bearish continuation here. This is a pennant. This is a bearish pennant. I'm looking at price continue to the downside. I want a thorough breakout and retest here. When I see that retest, along the structure part, okay, I'll look for entry opportunity. So I'm going to look for an entry opportunity along this area, guys. Okay, you can see to the left-hand side, this is structure, this is structure, this is structure, this is structure. Okay, so I'll look for an entry opportunity to the downside in this market. Okay. Okay, so guys, these are all. I just want to show us a summary of the trade setup we had during the week. Today is Thursday, tomorrow is Friday. Those of you who trade Friday, you can look at opportunity in the market. If you see any opportunity, you grab it. Otherwise, you stay out of the market and just enjoy the little profit you've made for the week. Okay. So, guys, thank you very much. That's all I have for you today. I hope you enjoyed this video. See you some other time. Cheers and bye bye.